So hi everybody, this is Hustle Hub. I'm Giacomo. Today I'm with Urmi Hossein. I've already done an interview with her. She is a level 3 candidate for the CFA. And today we're going to do a stock analysis of a stock that we covered, that is DocuSign. So Urmi, for those who don't know you yet, please introduce yourself and then we'll jump into the stock analysis.
Sure. So my name is Urmi, and I am, as Giacomo said, a level 3 candidate for the CFA program, and I work in compliance.
Okay. So she has a great experience in finance, given the fact that she has done the CFA. She passed both level 1 and level 2 at the first attempt, right?
Yes.
Okay. So we've done a stock analysis for you, so we'll jump into the presentation and let's go.
So thank you, Giacomo. And Giacomo and I, we had a chance to do a stock analysis on DocuSign in the past weeks. And the reason why we chose DocuSign, it was because we wanted to see how a COVID stock performed during the pandemic. During the pandemic, we see many companies to perform really well, such as Zoom, Peloton, and our attention was mainly on DocuSign, which is a company that provides e-signature services to a worldwide customer base. The company has proved to have a very strong performance during the pandemic, especially because as everyone was working from home, the world was practically virtual. They came up with this solution of providing e-signature services to anyone who had to sign basically important documents in a paperless way. And their operation proved to be really efficient, cheaper, and much faster as well, because you don't have to move somewhere to sign some documents. You can do it immediately from the comfort of your home. The company provides mainly e-signature services, and if we move into the next slide, we can see that the industry they are part of is very huge. It's in a high demand. And basically, it is expected to grow to 7.9 billion by 2027, which is a growth of 28% from 2019 to 2027. So it's definitely something that it's in a high demand, and definitely the company is in a very strong industry. And one thing that we found is that as of July 2021, DocuSign has grown their customer base to 1 million customers, and mainly because all these clients that were using e-signature during the pandemic. And when we looked at the other competitors in the market, we found that there were most of the companies that are in the e-signature industry are basically private, so we couldn't find too much information. Wings was one of the company, then we have SignNow, and we have Adobe. And Adobe is known for giving a lot of services, providing a lot of other products that DocuSign doesn't give. And Adobe has been in the market for a while, and they have a very huge customer base. And we basically thought that Adobe could be one of the competitors for DocuSign if they decide to expand their services and they try to, promote a lot of their e-signature services to the current customers, which could be a threat for DocuSign, because it would mean that they will steal, or they will steal basically the market share of DocuSign, which it currently holds. So that's one thing that came across to our mind, and but for now we can see that DocuSign holds a very strong position in the market share. It's very highly concentrated around this main company. So one thing to keep in mind is to see how things evolve between DocuSign and Adobe in the future.
Yeah. For those who don't know, Adobe is the company that is behind some of the most use softwares, something like Photoshop that everybody has heard about, for those who do video editing, Premiere, and so on, and other softwares like InDesign, Illustrator, and those are the softwares that we talk about when we talk about the creative services. And then Adobe has the cloud services. So yeah, it could expand the digital signature service and promote it to its already very big client base that the company already has right now. So that could be a possible threat to DocuSign.
And it's much bigger. It's a much mature company, has been in the industry much longer than DocuSign. So it really knows how things work around. So that could be maybe a potential threat, but we will have to see.
Okay.
So the performance of DocuSign, basically we have found that, so the company was founded it was founded in 2003, but they went public only in 2018. And it's a company that it's relatively young, but since they went public, they had a huge the stock performance. So prior to the pandemic, they were basically, the revenue was growing, if I'm not mistaken, by 38%. But just during the pandemic, they grew like the revenue growth by 50%. That was a massive increase in the revenue. And of course, this was due to the pandemic. We can see that their stock price dropped last year at the end of 2021, and that was because of some earnings announcement made by analysts and the CEO. So now we will go and see. Let's move forward. We will go and see their revenue. We will do an analysis of their financial statement, and we will start with their income statement. So as I was saying, we can see that their revenues are growing massively, and there was a 50% growth just during the 2021. And we can see that they have a positive gross profit. However, when we see their operating expenses and when we see their operating income, we can see that they have a negative operating income, which is translated also into net losses when we look at their net income. And the reason why they have these losses is because since the company went public, all the revenues that they have collected has been used to basically to invest for growth. So a lot of the things that they use is mainly for research and development, for marketing, so which leaves the company with nothing left. And I would say that this is pretty normal for a young company, especially because when we look at the corporate cycle of any company, when a company is relatively new, they tend to use all their money just for investment, which is why they have losses. Hopefully, once they're able to manage their operation much efficiently and they're able to have economies of scale, hopefully we can start seeing positive numbers when it comes to their net income. Then, one important fact is that the revenue sources is mainly coming from the United States, and it mainly comes also from the subscription revenue. So those are the biggest components of the revenue composition. So they are highly concentrated in the United States, and they are less diversified when it comes to the international market. Then if we look at the cash flow statement, so one thing that we can notice is that regardless of having losses, they do have positive cash flow. And it's important to note that the income statement is based on an accrual basis, whereas the cash flow is based on the actual cash flows. And this is pretty good that we can see that they have positive and cash position, and they have positive free cash flow, because it shows that, in case of like any, downturn in the economy or any financial distress, they have enough cash flow that they can use to liquidate or to meet their financial obligation. And we can also see that their main source of capital is also debt. So it's a company that is also using leverage to invest and to grow. Then we see their balance sheet, and what we can see is that their assets and liabilities have been growing constantly. And regardless of this, they are pretty solvent, and they have a high liquidity position because they're able to meet their long-term and short-term obligation. And in terms of their balance sheet, we didn't find anything in particular that was outstanding. We saw that they have like positive netting. They have a positive equity position, so that's pretty good. And so for 2022, so when it comes to DocuSign, one of the things that I noticed during my analysis is that some of the ratios, so some of the profitability ratios, like net profit margin, they're negative. We also looked into the return on equity and return on assets, which are all negative at the moment, for the simple reason that they are producing losses in their income statement. So, which means that they're not rewarding their investors in any sort of form. Indeed, they are not paying dividends. They didn't issue any cash back. And so for now, it's not a good thing from a company's perspective, but I think that is as they operate, as they grow, hopefully these numbers will become positive. And for 2022, basically the analysts, they issued a low growth rate for the company, and that was because the issue was that as 2022 was supposed to be the year where we were going to go back to a certain level of normality, there was basically this assumption that people were going to use the DocuSign less and less. And even the CEO of the company has made the same announcement, saying that they were going to expect a low revenue growth for the simple reason that we were thinking we were all going back to a certain level of normality. However, I think that when they issued all the statements, it was back in November 2021 or December 2021, when it wasn't really clear what was going on with the new variant. So I think a lot of the uncertainty with this company stays with the new variant, if we're able to cope with this or not. But as a lot of countries are in a lockdown, I think that probably this number might look a little bit different when we do a retrospective analysis. But so far, the analysts have agreed that their growth estimates are much lower for 2022. So that concludes my presentation.
Okay. So, well, DocuSign has a good positive that has a big stake in the market of digital signature. That's for sure. Do you see what are the most let's say dangerous competitors for them? I saw that Adobe, for example, that has a large client base, could use its client base to expand in this field. But on the other side, yeah, of course, you mentioned that the pandemic is not going as we thought it would. We're still in lockdown, so there's probably room for
more growth, I would say.
Yeah, that's for sure.
Yeah.
And of course, DocuSign is expanding its client base thanks to that.
Yeah,
okay.
And I think if I don't want to wish us to stay more in the pandemic, but I guess as things are evolving and as we see how things are going with this new variant, I think the company has still a very good chance to innovate and come up with new solutions, with new products. And I think the fact that there is this variant may help them in a way, because I think this company is definitely a COVID stock. It's one of those companies that probably a lot of people invested in, especially because they saw a very good opportunity during the pandemic.
Okay. But their losses are getting smaller, so their there's a good chance it will turn into positive earnings in the coming years, do you think?
It could be. I think it would, because right now, when we look at every company's corporate life cycle, they usually follow the J curve. So they usually have like an earnings which are negative, and then as they grow, as they evolve, their earnings start to turn positive. So I'm very hopeful that this company will generate positive earnings in the future.
Okay. So thank you for your research and for sharing it with us. I haven't mentioned yet, but Urmi just started her own YouTube channel, so make sure to subscribe. Even though
yes,
she's at the starting point, give her some time. and so thank you for watching, and I'm Giacomo. This is Hustle Hub. See you next time.